Good morning, good afternoon, good evening to all of you, depending on where you are joining us from. This is Dani Beit-Or. I'm in Southern California, so it's now 11 a.m. PST, and we hold those weekly live Facebook to create some engagement and give lots of you an opportunity to ask questions. So if you're joining us on the live, feel free to introduce yourself and put your name and say a few words or just say hi. And you know what, if you're here and you can just say, hey, I can hear you, that'll be terrific, so we know all the audio works well. And if you're joining me from on the recording, so you can always send us an email afterwards if it's on the audio, and you can always post a comment if you're watching online. So whatever works for you, we will be happy to speak with you, of course, and hear your feedback and comments. My main agenda for hey, good morning, good to see you again. It's only been 2 days. My agenda for this morning is of two sorts. The first one is an opportunity for you to bring your questions. That'll be my ultimate goal or my ultimate preference, so I don't have to talk about whatever I want to talk about, but actually give you an opportunity to to bring your questions, and then we can answer them. And if I see that no questions are coming, every session is a little bit different, then what we're going to do is I have a topic I want to cover, which is about how to ways to take title or ownership or partner or finance when it comes to flips. And that's what I'm going to talk about if I don't see questions coming from you. Let me just quickly introduce myself. My name is Dani Beit-Or. I've been a real estate investor since 2002, and I've been working with many other investors, helping them to buy rentals and flips. And I live in California, but all the investment activity that we do, investment-wise, property-wise, is out of state in places such as Texas, Florida, Tennessee, Chicago, Oklahoma, and others. So in multiple markets, multiple areas, we work with investors, helping them buy rentals and flip properties. Now, I want to talk today on flips, and primarily on the partnership or financing aspect of it, because I get that question quite a lot. Every time there's a flip, someone comes up and say, hey, but how can I participate? If I have enough money or don't have enough money, or what is the what are the settings? So I'm going to tell you how there's different ways we go about it, and I'll explain those ways, and I explain how we decide on the structure, on the proper structure per transaction. So first of all, let me explain in general what are the ways we typically see investors structuring and financing transactions. So obviously, the simplest, easiest way, we have one investor puts all the funds. Let's just say we have a deal that between the purchase price, the renovation, and the holding cost, let's just say we need $300,000. Okay, so obviously an investor can come and say, hey, I have $300,000 available. I want to do this deal cash. Done. Nothing new about this. Easy and simple. Sometimes we see investors coming, say, listen, I only have a portion. Let's just say I only have 150 and 300 is needed, but I want to do this deal by myself. What are my options? You have two options in this situation. One is go conventional financing. We do have a conventional lender, and when I say conventional, I mean rates that you would typically get on properties, on buying rental properties. So today it's a little bit higher rate than your conventional mortgage, but it's probably going to be about 5.5%. And when I say conventional, it means conventional underwriting, conventional bank. And that type of a program is not very common out there, but this type of program will enable you to finance both the purchase and the renovation. And it doesn't really care what the condition of the property is. So if you go and buy a really conventional conventional mortgage as if you're buying your rental property, most times when the bank sends an appraisal over to the property, the appraisal comes back and say the house is appraised, we can move forward with it. But if the house is in a bad condition, Doesn't have to be a catastrophic one. Even in poor condition, in an unlivable condition, like many of the flips that we buy, they're not in a livable condition. They need work, even minimal work. The appraiser will come back and say the house is unappraised, or nobody can live in that house in this condition. And the bank, your conventional lender, will say, I'm not giving you a mortgage for this purchase, because fix the house first and then we can finance it. If it's not livable, we can give you a mortgage. For that reason, we need a different program. I call it, lack of a better term, I call it the Conventional Plus. This is a special program that you are able to purchase, buy a house in a bad condition, not livable condition, and still get a conventional loan and an additional conventional loan to fix, to do the renovation. So that's pretty good. I do have a comment about this program, towards the end. I'll say something about this program, but it's available. If you want to go with financing and cannot tap into the Conventional Plus program for one reason or another, what we were going to do is we can do either private or hard money. Private hard money are just in simple words, it's just another term for higher rates. Private money means let's just say a friend of yours saying, I have $150,000 available. I'm not interested in being involved in flipping, but I'll give you my money, 150, acting as a lender. I will lend you my money as if I'm any other bank, and you will secure my note, my loan to you in the property, 150,000, and you discuss the rate. Let's just say you agree on 9% annual rate, and done deal. So that's a private person. Hard money is usually coming from an organization, a business, an institution. They raise money out there and they give you the loan. They have a little bit more, probably will have a little bit more strict guidelines for financing, and probably a little bit higher rates, and will probably charge you a few points on the front. Points, 1 point is 1%. So if they charge you 3 points on a $100,000 loan, that means $3,000. Okay, that's what the point system means. And you can always you can use one of those lenders as well. So that means financing wise, we have three options: Conventional Plus program that I've talked about, private money, hard money. Those are available to you if you want to use those. We have a question: is how is a Conventional Plus in terms of the approval speed and rate? Excellent question. So Conventional Plus, remember, I am the one who's nicknaming this Conventional Plus. It's not an official name out there. The rate is super slow. It's probably 45 days. It will take 45 days to close such loan. One of the reasons it takes such a long time to process such a loan, the Conventional Plus, is because the lender needs to approve the contractor. So your contractor has to submit documents and license and insurance and prove all good standing. And usually the process of qualifying the contractor easily takes 2 weeks, if not longer. So that slows down the process. Their rate is today about 5.5%. It varies a little bit, but about 5.5%. So it's a bit higher than your conventional, the regular conventional mortgage. But do remember, the bank is giving you a loan on a house to be built or house to be fixed, right? So they're taking some risk here. I want to say that, following up on your question, when you're dealing with mortgages, it's very important not to look at the rate only, but the terms or cost of the mortgage, as well. And let's get around to that in a minute or two. When I'm done, I want to say, compare a few things between Conventional Plus, terms and rates and cost versus hard money. So I'm going to say a comment about that towards the end. So we talked about Conventional Plus. It's available. The hard money, private money, those are your options. Now, many times I have a situation where someone comes and for one reason or another, we decide to partner up with other investors. Now, you can do the partnering up on your own. Obviously, find a friend or 2 or 3 and do it on your own. What happened in our ecosystem is that we have multiple investors who want to participate on a flip, but don't have enough funds or can't get a mortgage, or for one reason or another rather do it as a cash deal. I'll explain that in a second as well. And they're a little bit lost because by themselves they cannot tap into those deals. And if they would just have another partner, that could be very beneficial for them. It so happens that we have many of those investors. They're coming up to us and saying, I only have 100,000, I only have 50,000, I only have 150, whatever, and I have the money, I have the will, I have the interest, but I can't do it by myself. In that situation, we partner up our investors, so you don't have to find a friend or someone to partner up. We're actually acting as the glue because we know all the individuals that don't know themselves, and we act as the glue. We bring them together, we create an entity, and then that entity takes ownership ownership in the property, and we start the flip this way. When I say an entity, some of you may probably think I'm talking about LLC, which we are doing LLCs, and we have done LLCs, but sometimes we don't do LLCs, but we actually create a trust. The trust, as a lack of a better term, I call it the light version of an LLC. It's incorrect to say it this way, and by the way, I'm not an attorney and I'm not a legal expert, but I've just been someone who's been doing this. Sometimes we these types of vehicles I've used to do mostly LLCs. Now I found that the trusts are providing me a lot of the structure that I need without a lot of the hustle that comes from an LLC. So there are some similarities between the two entities, and there are some things that I found the trust to be a little bit easier to work with. And we have to make that judgment call: should we use a trust or should we use an LLC? Now, let me tell you about a couple of ways how we decide should we use cash financing. How do we determine? So it really depends on my end. Every deal is a little bit different. Some deals we have to buy cash in order to move fast, so there's no time for financing. Many times, even the cash deals, we will still have time to do financing with a private or hard money, but not always. So sometimes the deal dictates the terms and tells me I have to do this in a financing. I have to do this type of financing or cash. Sometimes I would go in and we will buy cash, we will pay cash for the property, and we'll still bring in later the financing a little bit later. When I say later, that means we can still bring it as a private money or hard money or the conventional plus program. We've done all of those, but when I buy the property, I need to know what kind of financing I'm going to use, because it will be very difficult or practically impossible to buy the house under an LLC cash and then bring in the conventional plus financing. So I always have to know what the plan is, but I can even break it down into a few steps. So we can buy cash and bring financing later as well. That's also possible. When I say bring the financing later, it just means I'm gonna, not worry about the financing right now. I'll focus on acquiring the property, and then it'll take me another week or two or three to get the financing, or maybe a month, to get the financing that I'm looking to do. So the deal many times dictate the terms, but also the situation that I'm in. So for example, we have two properties right now that, today, Friday, the 20th of October in 2017. And we have two properties that we just got under contract. Actually, three properties that we're getting under contract. One is already funded, and it's already kind of on track to closing, and so it's it's no longer relevant for other investors. The other two may become relevant. We don't know just yet. We'll know in a day or two, and we will let our investors know about this deal, and then we have to make a decision. We have investors. We can do it. Some investors, if it's a smaller deal, we may do 2 or 3 investors cash. We may decide to do 2 or 3 investors with financing, one type or other type of financing, and we may even do it with one investor who will do everything, financing or cash. It really depends, but the deals themselves, the setting, what dictates. So there's always the preference I want, and there's always what the deal itself dictating to us, terms that are coming usually from the seller, or terms that are coming on the marketplace. In order to move a little bit faster, we need to go to move a little bit faster. So some are objective and some subjective to every deal. We have to make that decision per transaction, and then we build, we build the deal. By the way, if, someone just commented that they, want to know about those deals. So absolutely, you can, if you're not on our mailing list, by all means, email me, or put a, probably better to just email me. And I'll put my email here. It's Dani at SimplyDoIt.net, or just find me on Facebook. So Dani at SimplyDoIt.net. You can email me, and we will include you on our mailing list if you want to, and then you'll learn about those. Thank you. Here's my email. You will learn about those deals. So that's definitely a way to learn about it. Now, I want to tell you one. So before I have a, I realized something regarding the financing just recently. But what I want to tell you, what I just want to do is a little recap. So we can do cash, we can do private financing, private money, hard money, conventional plus financing. So various type. We can do one investor or multiple investor. Every deal and every deal we make a little bit different decision, but that's usually how we go about it. So those are the types of situations, and we can go. The property can go under the investor name or under some entity such as an LLC or a trust. Again, everything is dictated by the terms, the settings of the property and the purchase and who's involved. Okay, so that's how usually we make those decisions. I want to just kind of maybe finish up with a note, at least finish up what I wanted to cover, finish up with a note that I have, after doing multiple deals. So we've done about 100 flips to date. We have about 14 flips ongoing right now, and 3 more in the pipeline to close if everything will be okay in the next month. Within a month, we'll close on 3 more. So we've had a lot of volume here. If you are not familiar with our flipping process, we do all the heavy lifting. So even if you have a job, or even if you are out of the country, in a different country, we have, we actually run the flips. So investors who work with us don't have to be knowledgeable about flipping, don't have to live in the States, they don't have to do pretty much anything. You are mostly involved as a partner, as an equity partner, investor on the deal. You benefit from its success. You take the risk that if things go badly, that's something that you have to understand. It's, we're taking. If you are someone who wants to participate with our deals as a private lender, like I just described, of course, we'll be happy to work with you as well. I always like to work with people. Private lenders is, for me, more favorable than hard money for obvious reasons. So there's several ways how you can participate on the deal. But I just want to emphasize, you don't have to be a flipper. You don't have to be, going to the job site on a daily basis or weekly basis to check on your property. That's what we do. We employ local teams currently in Tampa, in Indianapolis and Chicago. Those guys are doing all the legwork. We've been working with them for a long time. We know their qualities. We know everything about them. They report to us, so it can be a very passive activity for you. One thing I want to finish, to wrap up on my end this session, and I'll take questions if you have, of course. I've had recently an interesting observation. When I compare the conventional plus program and a hard money program, and the rates, the rate is like 5.5, and the rate that I'm getting is 9% ish. Okay, so it's quite almost double, so quite a different. But what I found, that with all the overhead cost that the conventional plus program has, when you look at the over time, over a period of several good months, let's just say anywhere from 8 to 12 months, when you look at the overall cost of the loan, I have found that they're almost the same. So if I would hold this property for a very long time, maybe more than a year, then the differences will obviously grow and will be better. The conventional plus will probably be benefiting. But if I'm holding it probably up to a year, right, depends on the terms you're getting, but the conventional plus program carries quite a lot of overhead expenses. the bank has to mitigate significantly against all their, against a situation like this, because they're giving you more money. They're not really giving you, but they're allocating more money to you than the property is worth when you're buying it. So they're taking more risk. Not that the hard money lender is not doing it, but they just go about it a little bit differently. So I have found that if I have two programs, that the overall cost, not the rates, but the overall cost of the financing in a period of 8 to 12 months is almost the same, then I definitely prefer working with hard money, because hard money will be quicker, easier. Every time that we draw money from the conventional lender, it takes 2 weeks easily, and that slows the project down, and that's money, and they're very difficult to work with, and more paperwork, and so it's expensive. Hard money is more expensive but easier to work with. Conventional plus is cheaper but very difficult to work with, but also has quite a lot of overhead expenses. So the cost of the mortgage is expensive. So I have learned that in most cases, I'm going to make a judgment call every time, but in most cases I rather work with hard money, even if I'm paying a little bit extra, because I just had a conversation with one of my contractors yesterday, and I told him, listen, how do we shave more time on the construction? You're asking for 7.5, 8 months construction period, start to finish. How do we shave more time on that? It says, Danny, easily a month. If we eliminate the conventional plus program, we will easily shave off a month, maybe even more, but easily 1 month just there. And on a project like this, a month, it's quite a lot of time. And we are looking into ways how to shave more time, so we can actually reduce what now is taking us about 8 months of construction on those type of projects. Not all the projects takes 8 months, but this one, if we shave off 1 month, it's it's quite significant, and we're looking for ways to shave another month or two, so we can take this project. So usually, in Chicago we have big projects, a lot of work, and we want to minimize the time it takes to complete them. So we're looking into it. But one of his answer was get rid of those conventional plus mortgages, and we'll be in much better shape. So I just wanted you to understand that when you're looking at this conventional plus with lower rate versus hard money with higher rate, who cares about the rate if the overall expenses, the spending on the financing is almost the same? So why wouldn't you go with the easier route altogether? That's what I wanted to cover for today, about financing, about structure, how to take ownership, how you can partner up, what kind of programs are available. There, you may have different other ways, if you do, please share them with us. I would love to hear it. Other ways you take, you found that could work for you, that'll be terrific. And I'll just wait here for a minute or two to get your questions. I see the first question, another question coming in. Have you considered expanding to flips, to the Northwest? Absolutely. There is a team in Portland. We are communicating about it. They keep sending me deals, and the numbers are just not that attractive to me. The team is really good, but I have a problem with the numbers. So Portland is where we're looking at. I think if you're talking about Northwest, I would guess you're talking about either Portland or Seattle. Seattle has got to be very expensive, so that's the reason why we're not considering there. And Portland is really getting expensive as well. So I'm still looking, but it's been a challenge with Portland. Absolutely, the market has really gone up in price in Portland in the past year or two. So that's got to be more and more. Well, see, I'm an investor. I look at Portland. What's the return, how much money I need, and what is the risk? And I look at Tampa or Chicago or Indianapolis, and the numbers are much better. So I'm an investor. Why would I take, the higher risk, less rewards investment, and maybe even a little bit more challenging to do in Portland than than an easier one in another market. I have nothing against Portland. I love this area. I went up there to check on their projects. Everything could work well, but it's just it's mostly the numbers. Quite a bit different. So that's just my take. And this is a professional team. They have processes in place. They have like everything is running. This is not like they really have a good operation up there, but that's how that has been my observation so far. Maybe something will change and it will create an opportunity for us. I'm definitely open to it. Thank you for your question. With pleasure. Thank you as well. Thank you for saying hi. Okay, you guys, I see no other questions are coming, so I really appreciate you taking we have 25 minutes-ish, and for your questions. Always a pleasure. We are going to hold this. The plan is to hold this. This is the third one I think we're holding. So every Friday, 11 a.m., we're going to have a session, ideally an open Q&A session. That's what I'm looking for. And but I will always be ready with a topic that I go through my work week with talking with investors. So get in touch with us if you want some additional information. We have more than 300 videos on YouTube. You're also welcome to benefit from that. Tons of education. Have a terrific weekend. Thank you for your questions, and hopefully I'll see you next week. Bye bye, everyone.